Okay, quick Friday morning radar update. First things first, had some pretty good messages from people out there on Twitter about the content. If you want me to continue dropping these public, just give it a like, follow the channel. Occasionally I drop different videos on there. I'm trying to move most of my stuff to sort of YouTube. It just works better for me. We do the end of day screenings through YouTube as well. So if you get something from the content, let me know. I run these every day. Have done for the last 10 years plus. Pretty mechanical way of doing things, and there are methods to the madness. So let's just come at these today. What's happening? Inside day on the DAX as good as, small caps through the lows, 250 through the lows. So risk markets are soft today. FTSE 100, it's made up of kind of things we don't trade, just a very mixed up market. It's through the highs. So we'll move on from there. We'll quickly have a look. Cable, it's in an uptrend. Meaningful dips are where the sort of reward to risk is found. At the moment, it's just still melting on its uptrend move. Moving on from there, we talked about the dollar bull. That this is on the other side of the seesaw of commodities, with commodities being priced in dollars. So, dollar is coming back in again. Let's just move on from there. We'll quickly have a look at treasuries as well. TLT's the one I like to sort of track. So we've got a bear flag. We're moving down. We've been talking about this on. Put the log scale on. Always put the log scale on when you can, going back in time. And we talked about this one here. Even this one here was a bit of a 2 standard deviation move. This one here was an overwhelming spike higher, and there was a setup for it as well. You never know how far they're going to go, but we'll move on from there. Let's quickly have a look at Bitcoin again, because rinse and repeat. People will fight trends, and I'll show you how people look at these things. They'll probably be on a spread bet chart. They'll probably be on an hourly chart, or even a 5-minute chart. But they'll look at things like this, and they'll think because something's made a run like that it's got to break trend. And yes, unbelievable run. Let's do it in a sensible sort of way of doing things. Put the log scale on, hit the monthly chart. The setup we noted was viewable on a monthly chart. It really was. It broke out on the monthly and it came back in. But you put a weekly on there, you even get a weekly swing bar in there, and you get the breakout, the first reaction, off it goes. Now just let's go back to the monthly. At no point in this trend did it ever even visit the previous month's low. It didn't go near it, Soapbox day. Let's have a look at the weekly. We've got this big weekly spike up, and then inside. What's an inside? It trades inside this bar. Inside. This one's inside. Yeah, it takes the low of that one out. Inside. Look where the closers are. Hammer time. Still inside. The closers. This is the range of the closers. That didn't work, did it? So there's the bar. You get my point. You get my point. I'll just do that again. You know, these are where, you know, it closed here, it closed here, it closed here, and it closed here. Inside this big up bar. At no point in Bitcoin's trend did anything show any weakness. Now, if you look at it in percent terms, you've got, well, that was how many percent pullback? Well, yeah, you know, volatility. You know, products have volatility. You know, and you know, if you look at them like this, you're going to see the volatility. But if you go back in the history of Bitcoin, you know, base, pop, base, pop, base, pop, base, pop, you know, base, pop. Off it went on its journey. Same thing, right from the lows, you know, base, big. And these are huge moves, but they're extremely orderly moves. So, there's a lesson in position sizing here. Volatility doesn't make the position risky. Not position sizing for the volatility is where the risk is. Moving on. Totally off piste. I always try and do something just, you know, comes to us. We jump on it. Now it's Friday. It's a little bit of a boring day today. Let's renowned for being a slow, sleepy market. We'll hit the volume leaders. It's 13 minutes past 10. We should have traded 25% to be an average volume. That will be about 38% to be on conviction. Large caps, 25%. I'll just buzz through these. IQE. Speedy higher. Working on a swing bar. Not that I like the forward numbers in it. NFC continues. And it's another thing, you know, off piste again, backcountry, as Will said last night. You're out in the backcountry. You know, me included, when I talk about a stock, if I post it on Twitter, I'm going to show you something like this. And it's probably going to look like you're buying, you know, I'm buying the high, which I am, if I was in it. Or I'm going to show you, you know, the process. You know, I'll be showing you something like this. And I'll be saying, you know, study, something like that, you know. So you'll see this and you'll see this. Now, social media works. The way it works is everyone high fives and shows you what is working in their portfolio on that day. That is how it works. It is a look at me sort of process. Look how good, you know, my stock's going. If you're new to this game, you never want to be getting involved. We call it the story zone. You know, you never want to be getting involved on something what is up in the froth. You know, it gets a little bit frothy. Everyone's talking about it. Go back to GME. You know, as soon as they go back to silver, gapped up, everyone started talking about it. It cratered. You're never going to make any money chasing, you know, people's great results. You know, great results are made by position sizing. I mean, I'll just jump onto one of mine. I know it's a high five sort of way of doing things, but I'll just jump onto this one. And, you know, this is where I got my sort of swing day on this day to get involved in this stock. And this is where I'm positioning for the move. And we never know how far they're going to go. But, you know, that was the swing day. It traded 165% out of the swing day yesterday. You know, huge move. It was a swing trade for me. I took some risk off on my swing move, and I trailed the rest. So when I post this, you've got to look at how did he position size for that, because this is no use to anyone up here, but it's a little teaser to go and look how, you know, nobody shows this. This is what I focus on every day. This is what we do. We look for low risk scenarios. Nobody has ever, it's radio silence where the best reward to risk is found. And these stocks are in uptrends. I don't buy anything in a downtrend. I only buy things in uptrends. And it, you know, radio silence when this hits our screens. So, you know, that's how the risk is tiny, the reward is huge, and that is how you're going to make money in the markets. You've got to flip it on its head from being a follower to a, you know, trading your own sort of path. Moving on. Marks and Spencer's working on a swing bar today. Right side of a potential base. Voodoo average comes into play. That'll hit the swing screens tonight if it closes up. Pay point. Talking about this, a lot of these beat up stocks, you know, they do dead cat bounce and then they're lost in the wilderness, and then the good ones will start to base out over here somewhere. LTG continues. This one, I was in this one. I took it off over here actually when the market was crashing. And we'll go into the small caps and see what's moving in there. It's 18 minutes past 10. We should have traded about 27%, I'd say, to be on average volume. There's a few more running in the small caps again. Let's quickly get into these. Yeah, small caps are quite healthy again. Blue Sky Miners being fine. Few pharmaceutical, yeah, general mix. I'll just go through in order of construction stock, this one, so it's a little bit boring. In order of sector, construction again. Let me just check. I'll put the daily on again, then we can let's do it on the daily, hey. Everything with a good news reaction will be on these screens as well, so long as it's in an uptrend. I'm not interested in anything in a downtrend myself. Rear view, good move for those in it. Basing out this one, I've got no numbers on this one. I know it had good Q on Q numbers. Little retrace area on that one for the gunslingers out there. Rear view. Bids came in again, didn't it? First time it's hit the screen since I sold it, this one. I sold it in 2 pieces, 3 pieces actually. I bought it here and I sold it, I think, where did I sell it? I had a 1-day stop on the rest anyway, so it took me out here. I sold some probably on this day, and I sold some on this day on the spike, and then I got stopped out on the rest there. I'm happy with that. That's my piece. If it sets up again, I could jump in again if I wanted to, but I tend to be very ninja-like on those kind of stocks. Trade anything. Turn. Crikey. Made a lot of money on turn in the past. Just riding one of these moves up, I think I made about 400% against the biggest bear out there. I was just trading price. It was this run up here I traded back in 15. And I sold to the moon, people, as I always do. Log scale back on. I'm in this one. It's moving out that little base there. So nothing jumping out there. We just run the screens every day and see what there is. You know, if I traded every day, I wouldn't be. I would just be funding the broker, wouldn't I? The way trading works, investing works, trend following especially. You know, I trade different time frames. You know, on the longer term trends in small cap growth. You know, if I bought one trade a week, one trend a week, and got to add to that trend, well, that would be, you know, 70 to 80 trades a year. And when the math basically is, if you buy the best trends, they're going to be trending for a lot longer than a year. So it doesn't make sense that you're going to find an idea every week, not even every month. You know, it's patchy. You get a whole heap of ideas. They all tend to leave the station at the same time. As July was that time for us, and then they all start running, and I add to them on the process. You know, so I probably do as many adds to my position as I do actually taking positions. Is the best way of kind of explaining that. People think you have to be active to make money. Not on the trends, you know, inactivity. If you're right, you just sit tight. Swing trades are a different sort of methodology. They make money by rotating the secondary steps in the trend. And on average, that will still take, you know, weeks to a month or so to play out. You know, a fast one will be 5 to 7 days. You know, on average, it's probably going to be 17 to 25 days or something for a swing to play out on a big swing. So, you know, do the maths. You know, how many trades do you have to really take? You know, it's not, you don't step up to the screens every day and go, what's the best thing to trade today? No, it doesn't work like that. You know, you wait for the good things to come to you and just execute when they do. Okay, soapbox day. Friday is soapbox day. Okay, cheers all.